Well, I figured today is a good time to, I guess, put into practice the some ideas that I laid out in the video last week, called something to the extent of stop overanalyzing the stock market, because the media is doing just that. They're doing everything that I advised against last week when it comes to when you've got moves up or down in the market. They always try and attribute it to some news story that is making the markets price in this new information, and it's all very rooted in the efficient markets hypothesis and this idea that the way that equity markets and exchange traded markets work is like some big calculator, and they're trying to do a bunch of math as far as what the price of certain information should be. But as I said before, that's not really the case. It's a much more complicated picture than that has to do with the fact that we're dealing with prices here. You're dealing with more social science than natural science. It has to do with people's feelings and things like that. And so yesterday and today offer good examples of that. But first, I'll go over the news that the media is crediting today's slight rally with. Now, of course, just to be clear, so far as of recording this, the rally's not nearly big enough to overtake the losses of yesterday. Perhaps it won't get that big all day, and it will still say, red over the course of the 2 days. But nonetheless, it is reassuring for a lot of people to see, just green numbers when they check the stock market. And so the reason for this, we're told, is President Trump last night announced that in order to relieve economic tension over the Wu flu, he was considering trying to, pass some kind of payroll tax cut. Now, for those of you outside of the United States who don't know how the way the American government works, the President of the United States actually can't cut the payroll tax. Congress would have to do that. And, so essentially what President Trump is saying is that, hey, if Congress passed this, I would sign it. I wouldn't veto it. And the idea is that, if you cut the payroll tax and you give more money to people to go out and spend, and, of course, more money to businesses to go out and invest, well, then that's going to help the economy because, there's going to be more money available. People aren't going to be as constricted in their budgets. All of a sudden, they'll have, more income. And so the media tells us that, the reason why you're seeing this rally today is because the market is pricing in the benefits from the possibility of such a payroll tax cut, because, of course, it's far from being assured. All we have is the president's word or suggestion, essentially, at this point. We don't have, we don't even have a bill in Congress or anything like that, let alone any sort of implementation. We haven't seen the president sign it yet, so we're very far from that. So they're only pricing in the possibility. But as I said before, it's naive to look at the market as if that's all that's driving it here. Because the fact of the matter is that if the market was poised to go down today, this news would not have prevented that. In the short term, markets behave according, largely to a pattern of behavior. The markets sort of move in their own way. And this is, again, it's not a science. It's an art that many people have to learn. It's an art that I'm not well versed in. But it is the art of understanding the mechanics of how the markets operate. And so rather than looking at this payroll tax cut, potentiality as the source of this rally, you need to look at it as the trigger, because the rally was already poised to happen, and here's why. Yesterday, when we closed, the S&P closed right at 27,050. Or I'm sorry, 2,750, not 27,000. That would be a very great day if the S&P closed at 27,000. But anyway, it closed at 2,750 points. And that, for the technicians out there, the technicians that I follow on Twitter, were saying that 2,750 is a major support level. And what that means is that psychologically, there's going to be a lot of people who come in and just for subjective reasons look at 2,750, and this is based off of there are actual concrete mathematical reasons for how they come up with the number 2750, and also a lot of times these support levels are based off of looking at the past, at where the price has hung up before to where the price has bottomed out and then shot back up again. That's how these support levels are sort of divined, you could say. So anyway, we had support at 2750. So what that means is that there is a potentiality already that the market is going to rally higher, because people just see it at such a low price that folks say, hey, there's a chance that the market could go up from that the market is going to bottom here, so I'm going to buy. So you have to think through this as these are not people who are just buying at random. These are people who are thinking through and have a reason to believe that this level of the price is important. And so they want to take a bet that the price won't keep going down. So there is going to be a pool of people who are going to buy for that reason. Whether there is enough pressure from all those people or from other people for the market to indeed bottom and then rally higher, in the short run, is a matter of that's a matter of chance. It can go either way. They can take that bet and lose, or they can take that bet and win in the short term, as they did this morning. And so therefore you have upward pressure on the price at the support level from people on the long side of the trade, meaning people who are betting that it is going to go up. Now you also, when you hit key support levels, this is the big thing that I think a lot of people don't realize, especially people who watch CNBC, because CNBC doesn't talk about this kind of stuff. They don't want to scare their viewers. They want to keep people engaged. They want to keep people happy because they want them to leave the TV on. If people only hear bad news, well, then they're going to turn the TV off because they don't want to hear it, because there's nothing they can do about it other than just, wallow in their own despair. And so the other big reason why at support levels there's a big chance for a rally upwards is that you have what's called short covering. When you short a stock, which is how, essentially you bet that it goes down, this is how you help drive down the price. Other than people, because, there's two ways to sell a stock. Either you're someone who already owns a stock in something and you say, hey, I think the stock's going to go down, so I'm going to sell now and try and get my money out of it. That's one way of doing it. But also, even if you're someone who doesn't own the stock to begin with, you can bet against the price and help drive it down further by shorting it. And what that means is that essentially you borrow some of the stock in, let's say, Microsoft, or let's say you borrow an ETF that owns the entire S&P 500. You want to short the SPY. Let's say what you do is you borrow 50 shares of SPY, you sell them on the market to get the money out of them, and then what you have to do later is you have to repay your broker those shares in SPY at a later date. And so at some point you'll have to buy them back and give them to him. But the idea is that if you sell now when they're high, you'll be able to pocket the difference. Because if the price goes down, well, then you're going to be able to buy those shares back at a lower price than you sold them for initially. And so that is, that's the point. The point at which you buy that back is the point in which you cover. And people who are, professional short sellers that aren't just doing it by the seat of their pants will find a level in the price in which they think that, that they're willing to risk that it's going to fall a certain percent, but then at a certain point they're going to, whether they think it's going to keep going down or not, they want to lock in those gains from their short. They want to be able to pocket their profits. And so it's very likely, I shouldn't say very likely, this is what people do. They're going to pick a key support level like, say, 2750 for to cover their short. So essentially, when people who were betting that the market was going to go down at 2750, a lot of them would have gotten out and would have bought their shares back and covered their shorts. Now that doesn't mean that over the course of the week that the stock that stocks aren't going to keep falling, but what that means is that like I said, you already have pressure at a support level from people on the long side who are actually bullish and think that the stock can go up, but you also have pressure driving the price up from people who actually think that the stock is going down and who are betting against it from the shorts. So you have upward pressure on the price from both sides. And so when you have shorts, so many people who are short covering their short at the same level, it's possible for, just because of the shorts, for the price to rise in the short term, and that's called a short covering rally. And that is a phenomenon that is not at all bullish, because those are, the price is not going up because people are so optimistic about the direction that the price is moving, or that they're optimistic about the future of the stock market. They're buying it just to cover themselves, so that they can pocket some of their profits from shorting it. Because a lot of these people, once this rally takes off, are probably going to go short again. And that, of course, is going to drive the price back down. And this is the kind of price action you see on the way down when markets are crashing. You have, a series of events to where people short and they sell a bunch of stock and then they cover and it goes back up a little bit, and then they short and it goes down even further, and then they cover and it goes back up a little bit. And then meanwhile, the folks, who are watching CNBC and are having, trying to, have the hosts there hold their hands and tell them everything's going to be all right, their heads start to spin because, it's just whiplash going back and forth, and they don't understand why. because to them it's being presented to them as, oh well, today there was good news, so stocks went up, or yesterday there was bad news, that's why stocks went down. And so they're overwhelmed by this constant high and low, these highs and lows of good news, bad news, good news, bad news, when the news are it just serves as triggers a lot of the time to justify these day-to-day actions. Because let's say that this news about Trump floating the payroll tax cut, let's say that didn't happen, maybe markets would have continued to go down overnight and into today, because it's perfectly possible that happened. But because the market was expecting that there was a potential for a bounce, the slightest trigger was able to spark another rally like this. Because without the payroll tax cut, you were going to have on the margins less people who are going to be bullish, because you had people, not only people who are, like I said, there's three categories here. You have the shorts who are covering, who are going to put upward pressure on the price. You're going to have people who are seeing that stocks are at a key support level and they're willing to take a bet that stocks may go back up, so they'll go long now and they'll buy. And then but then now on top of that, you have people who are saying, hey, maybe this payroll tax cut is a good thing for stocks, so I'm going to buy. And so that, it drives additional pressure. Perhaps there had been enough selling pressure without those people to where the stock, the price still would have gone down, even with the shorts covering. And so, when, I guess, the conclusion here is that when you see a lot of volatility, you just need to keep your head straight and realize that, these things are happening for a reason, and that it's not crazy and hard to understand. And so it's perfectly possible to watch all of this stuff unfold and keep your cool and not have this, this constant uncertainty, although there is still a lot of uncertainty. So with that said, if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.